Today we're going to be looking at another harmonic pattern, so let's get straight to it. Hey trader devs, I hope you're going extremely well. My name's David and welcome to my channel where I go through trading strategies that I find on YouTube and on the web, and then I use code to debunk the bad ones and find the good ones. Today we're going to be looking at these harmonic patterns. Maybe it's because of my coding background. As a trader and a coder, I personally enjoy trading patterns because I find that they're easy to predict, easy for me to find as a coder. And using tools like Fibonacci, etc. helps us to find a take profit and a stop loss quite easily. Today I'm going to be looking at another pattern which is also called the ABC pattern, but an ABC continuation, also known as the AB equals CD. There's slightly nuance between the two, but we're going to be looking at how we can trade these. And then what I'll do is I'll go away and I will code it so that you can use it either as an indicator or a strategy, but the most important thing is you'll be able to backtest it using data from TradingView to see if this actually works as a strategy in real life on real markets. Okay, so I guess the best thing is to get straight to my computer, start having a look at the pattern, and I'll show you what's entailed inside the pattern, and then I'll code it like I said. Before I go to my computer, if you do enjoy this video, if you don't mind just giving it a big old thumbs up, it helps me to get found in the YouTube algorithm. And come join the community on Discord where we talk about trading strategies. You'll find the links below in the description. So let's get over to the computer. Okay, here we are on my computer. As always, I'm going to go through very quickly the strategy and how it works. It's slightly different it's quite a lot different to the previous ABC strategies that I've been talking about, which was introduced to me by Kite Crypto. Definitely go and have a look at his channel, a great way of looking at it if you're an average trader. But this one is the ABC continuation pattern. You can go here to this website. I'll put the link down in the description, where it just literally gives you an overview of the ABC or the AB equals CD chart patterns, and we're going to be looking at them today. So all parts of this pattern are under the rules of Fibonacci and the gods of Fibonacci, so everything is quite, like I said, predictable, and you'll see in a second why this is quite a good pattern. So the difference between an ABC pattern, where I've been doing previously ABC, for everybody that knows us here and knows the old ABC patterns, this was the previous ABC. So what we were doing was we were creating an A, which is an uptrend here. So we're going into an uptrend where the uptrend breaks down into a downtrend, and that is creating a B, so that's our B, and then we're taking and breaking that trend and going back into an uptrend where we create a kind of a double top, I would say, and this would have been our entry. Now the pattern that we're going to be discussing today is slightly different and can be slightly more predictable, to be honest. Okay, so go back over to this website. We've got a great drawing that's going to explain to us what we're looking for today. As you can see, we're actually not looking for the ABC pattern in the same way. We're going to be not looking for a new low when we're looking for a high. We're actually looking for a which is after a downtrend, and it's going to be a reversal pattern as well. But the idea is what we got is a downtrend, and we make our first bottom here. And then we make a new high, and that new high comes into a higher low. There's two ways of actually taking our entry. Otherwise, one way is at the B pattern here, as we break above the B pattern, which is very common. There is other ways which are less common, which are the a couple of bars after the point B to C is made. We could take our entry here, which would probably be better for leverage trading. I think I'm going to be coding the first one here for the moment, and then I'll improve the code afterwards. Okay, so let's go and have a look at a chart at what we're doing and how we do this with Fibonacci. So if we are here, we have our up pattern, uptrend from here going up to here, where we take our first top. We would have a new low here or here. So we go here. and we are making a new lower high here. So this is going to be a reversal towards the downside, and we're going to be trying to predict the length of this C here. So if I put the C on what's actually been made, and then what we're going to do is we're going to take a Fibonacci, and we're going to use a Fibonacci trend-based Fibonacci extension. So we're going to take from the very, very top here, and then we're going to go all the way down to the bottom of the A here, up to the B. Now I'm just going to pull that along so you can see how wonderfully magic this is and how it works. Okay, so if I go all the way over here. Now, this pattern, we'd have several take profits. So obviously we would have had our 1.618, which would have been our take profit 1. Our take profit 2 would be the 2.618, and then our third take profit, which it would have just missed, but not far off of, would have been the 3.618. Now if I Okay, so we're going to try and predict a reversal. So you can see we're in a kind of a consolidation, but a downtrend here. So our first point would be the lowest low here, and we're going to go and create a new higher low, which is just here. And then we're going to go and try and predict this longer C leg. Okay, so now if I do the Fibonacci trend-based extension here from the bottom, from the very, very bottom here, try and get it in the right place, coming up to the top of the A and then coming back down to the B here. As you can see, we have actually beaten the predictions. So we have our first take profit at the 1.618, the second at the 2.618, and the third one would have got all of those the predictions. So we have our first take profit at the 1.618, the second at the 2.618, and the third one would have got all of those. We would have got all of those from our entry. Could have a entry point as we break above the A line here. So we've broken across here. Let's just have a look. We need to zoom right in before clicking those buttons. Okay, if I zoom in here, we've broken across here, just here. So our entry would have been, if we're using a bot, our entry would have been just about here on this one here. And we would have had a stop loss. We could either put it here, or you could do a very small stop loss and get multiple entries if the first one doesn't go in. So your bot could come back and get in entries, and our take profit would be up the top here. So we would have had a risk to reward of 32 to 1, which is a fantastic risk to reward. Now I'm not saying they're all going to be this good. So when you look at the risk to reward on trades like this, you can see why I like trading patterns so much. You always have to look at that stop loss, and as always you have to be quite careful when trading these patterns. Okay, I guess the next part is to code this so we can make either an indicator or a trading strategy. The most important thing is we're going to get some backtesting results so we can see whether this actually works. Then what I'll do is I'll connect it to a forward testing platform that you'll be able to find on my Discord, where you'll see the trades as they happen live on a paper trading account. It is much better than an Excel spreadsheet because you actually get to see how it's performing on a live market. So let's get to coding it. Okay, so to code this, what I'm going to be using is the zigzag indicator, which you can find here. Zigzag updated in the built-ins. That helps us to find the tops and bottoms, as you can see. Zigzags here, and you can see tops and bottoms and pivot points. It's very good. It gives us the price at those points, so a very good tool. And on top of that, I will be using the Auto Fibonacci extension or retracement tool. I'll be looking into that a bit more for our take profit levels. So I guess the best thing to do is get coding. I'm going to go in and look at the code here and just add it to my boilerplate until I come up with a solution. So cue the music.
Come on, David, and once again he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD. If he doesn't run into any bugs, there will be a new strategy. Come on, David. Come on, David, show us what you got. Come on, David, our patience running out. Come on, David, show us what you got.
Okay, here we are on the indicator that I've managed to put together. So, as I said, it uses the zigzags lines to create our entries, just as we come above those ABC lines. So this one has actually created an ABC from here. Let's have a look just here, A, B, C, and as we got across that ABC line, we've actually taken our first entry. As you can see, quite a good win to risk to reward ratio. I've put it so that it detects the lowest low. I'm sure that you can actually even improve on that and make it much more of a smaller stop loss, but let's give this a look to see what this one is. Okay, so it's a long position. We're going to put our stop loss just here, which is a 7%, which is way too much for leverage trading if you're on a higher leverage, but okay, so that's giving us a 3.47 risk to reward, and here, this one here, which has got probably a better. I tend to have a very small stop loss when I'm leverage trading, between 0.5 and 1%. Like I said, that way I can just get back into those entries if I get stopped out. So let's go back over to the computer. But what's great about backtesting is it helps you to have a clearer picture, and after what I just said, I was looking at this entry here, which the stop loss was just put on this candle here. As you can see, it was so close to being stopped out, but the stop loss wasn't called, and it made all of those 3 entries. So that would have been a losing trade on my 0.5% stop loss. Right, so there's the entries. As I said, the downside to this, although this has a lot of wins here, as you can see, it has 3 wins there. Here it has a win. It takes the first and second, and then stops out at the break even. Go back over to here, you can see that it does have quite a few losses in a row here. That is the problem with trading these kind of patterns. You can end up in a row of losses. That's 1, 2, 3, 4, 5, 6 losses in a row. So yeah, it can be when you're trading patterns. Unfortunately, that is the problem that you come across. Right, let's have a look at the dashboard and some of those stats. Okay, so as I said, we have backtests of 168 trades. Wins are 107, losses are losses are 61. Win rate is 64% on these current settings. I haven't optimized it using the optimizer tool much. I've left it for about 10-15 minutes just to get some results so that I could show you. Max wins a row was 10. Max losses, like I said, 7 max losses, a lot of losses in a row. Profit factor is 1.4. 9. Kelly ratio is 1.2. Perfect for what we're looking for. Okay, let's pull this up very quickly. As you can see, the max markdown was 49%, which is absolutely huge. So it certainly does need more optimizing for this strategy. We have a net profit, which is good, which is 506% net profit, and as I said, that's on 168 trades. So I think for an afternoon of code and explaining, I think that's quite a good strategy. I'm quite excited by this one. I will continue improving on it, improving on the entry, maybe using more of the entry which is just waiting for a couple of candles and then getting that entry as quick as possible, or even waiting for a better confirm. I will also look for more confluence on things with EMAs and ADXs and things like that to get better results. So that was about it for today. Like always, you can download this indicator on TradingView. The link is down in the description. I hope you enjoyed the video, and for those of you that I haven't seen yet, Happy New Year to you, and I hope this one 2022 is going to be great for us all. And that's a wrap for today, so I will leave you with that. Have a good day, and I'll say keep safe and keep coding. Goodbye.